class. This is another episode wherein we'll be talking about two topics. Two topics that we'll be talking about is credit and debt management, which will be hosted by Mr. Nathan Hellman, and the other topic will be no insurance, which will be hosted by Mr. Niki Mutima. Now, I just want us to have a few proceedings just before we continue.
Yeah.
I'd like to ask everyone to mute their mics so that as to allow fluency in the way in which we're going. So I'll ask one of the host administrators to assist me in muting the mics. Let's mute the mics so that there are no awkward and bad interferences when we are proceeding. The second thing is that directly after the presentations by our two guest speakers, we'll have questions and answers. You are also free to ask questions. You can use the chat facility. If you go on your bottom left of the homepage, you'll see where it says more. You click on more. There's a function that says chat. There where it says chat, you can post your questions there. Like here I am, I'm saying welcome everyone. So there will be other subject specialists from Financial Care Corporation who will be assisting you to answer those questions that you have. Now, please note, we appreciate your participation. Thank you for taking time to participate in the Know Your Cash Zoom class. This is brought to you by Financial Care Corporation, but it is thoroughly sponsored and it is a big initiative by SAIA, which is South African Insurance Association. So we thank SAIA for this opportunity. We thank SAIA for all of us to be able to engage in such platforms. So without much ado, I would like us to continue to mute let us continue to mute our mics so that we avoid interferences. Allow me to proceed. Mr. Nathan Hellman, by all means, please come through and give us your rendition of the presentation of credit and debt management.
Thank you for the introduction, Kanani. Good morning, everyone. I hope you're all doing well out there and that you can hear me loud and clear. Once again, thank you all for joining us and being part of this wonderful initiative, the Know Your Cash campaign. And my aim today is to empower you with financial literacy content, specifically around credit agreements and debt management. I want you to leave this session filled with confidence surrounding the issues of credit agreements and that you'll hopefully never have a problem managing your debt in the future. So I promise you now that if you focus and you listen to what we have to say, you're not going to be a victim in this economy, but instead a well-informed, savvy individual. Now, there's a few expectations I have from all of you. Besides posting questions during the session, I want you all at the end or during the session to post on the live chat feature a sentence or two, even a few words on what you found most interesting about our class today. So please, I cannot stress this more. We need to see what you find interesting. Okay, now without further ado, let's get going. I hope everyone's ready. I sure am. So firstly, what is a credit agreement? Well, a credit agreement is a binding agreement between two parties where there's a facility extended by a bank or institution to an individual or entity. We all at some point are going to enter into a credit agreement, whether it's opening of a clothing account, purchasing a vehicle, acquiring a property, and many more. Therefore, it's important that you understand what you need to be aware of before signing on the dotted line that binds you to the agreement. So the main items you need to understand is the term, the interest, and the monthly installments. Now, the term basically means how long will the agreement be for. So typically a vehicle is around 60 months, a home loan around 20 years. However, depending on the deal, you may be offered a longer term which will reduce your monthly installments. However, it will increase your interest that you will pay. Now, the interest is probably one of the most important elements of a credit agreement. The interest is pretty much the cost that you pay in order to be advanced the credit facility. So the next important factor in a credit agreement is the monthly installment, which is the amount that you'll need to pay every month in order to satisfy the credit institution. It is your obligation in the agreement, and if you fail to pay your installments, there are penalties and consequences, which is all defined in the agreement. But if you manage your debt well, you'll never have to really worry about those horrible things, which brings me to the next topic of discussion, debt management. So before we get there, please, I hope I'm not going too fast, but if there's anything that you've missed out on, that you have questions, please go ahead and start posting them right away, guys. I'm going to now be moving on to debt management, all right? So debt management is one of the most important things you can learn within the financial literacy space, I personally believe. Before I delve into the nitty-gritties of debt management, I first want us to understand that the word debt is generally has a negative connotation on it. And that's because there are different types of debts, good and bad. Good debts that can be taken up with the potential to enhance your wealth in the future. I'm talking about acquiring assets or bettering yourself with an education, so with a degree or with a diploma or anything that can enhance your income generation ability. Okay, things like properties, business opportunities, and certain vehicles, certain cars, not all cars, but certain cars that can have an appreciation value in the future. Okay, sometimes even if a credit card is utilized to purchase a wealth generating stream, it can be seen as a good debt. But if it's used to simply go and splurge on an expensive bottle of champagne in a nightclub to impress your friends, well, that's definitely a bad debt, okay? Now, there will be times when you will be out of pocket, even if you've budgeted correctly. I'm talking about something out of the ordinary going wrong. The key thing is not simply to go and get an unsecured loan or micro loan, which are generally very expensive and unreasonable debt instruments, but instead to have perhaps planned ahead and taken out a small overdraft facility that, should you be in a desperate situation, you can use and repay it back as quick as possible to avoid paying interest. Now, an overdraft is often granted by banks as well as credit cards with a 60-day interest-free facility. So you have 60 days to repay the debt before paying interest. An overdraft, by the way, is offered to consumers who have an existing check account that is well managed. And the overdraft kicks in when you go below zero on your bank account balance. So if you have an overdraft facility of, say, 5,000, your account can go to negative 5,000 until it reaches its limit. Now, of course, if you have been saving correctly and adhering to our financial literacy topic of savings and investments, you won't need to consider such a debt instrument and can rather utilize your rainy day savings fund. However, at FCC, we like to really cover all challenges you may face and give you the best solution depending on your circumstance. So moving along now, creditors have an obligation to not extend credit to consumers who, for instance, have too much debt, and will always perform a credit check before offering a credit agreement. So what exactly is a credit score? Well, a credit score is an illustration of your credit behavior towards repaying debt. If you are a good payer, you will have a high credit score, and not only will your creditor decide to extend credit to you based on your credit score, but they will also decide what terms they will give you. So, for instance, if you've managed your credit well, if you have a good credit score, you'll qualify for a better interest rate, okay? And remember what I said about an interest rate, that is the cost that you incur as a consumer when taking out debt. So you obviously always want your interest rate to be as low as possible in order to save as much money as possible. You don't want to be paying extra interest because you've been managing your debt badly in the past. So it's always important that you manage your credit extremely well, okay? Now, remember earlier when I spoke about the consequences of not honoring a credit agreement. So before I conclude, I want us to go through the ramifications of poor debt management, as well as what the do's and don'ts are when you do perhaps find yourself in a tight spot with a creditor. So firstly, when you miss payments on your credit agreement, it starts reducing your credit score, like I mentioned. Now, this might not seem so bad because you may think, oh, well, I don't intend taking out any credit in the future. I have enough debt as it is, so who cares about my credit score now? But what about if a great opportunity comes your way and you need to access money straight away? You can start in generating income for. So it's important, always have your credit score at an optimum amount because you just never realize when you might just happen to tap into the market, okay? So once you start falling behind a number of months, okay, within a credit agreement, it starts building up what's called arrears, okay, which is a term that's described as money that is owed that should have been paid earlier. So let's say 3 to 4 months, a creditor can start sorting legal action against you by appointing a collection agency to attempt to collect outstanding credit from you. And if they fail, they can actually start seeking judgments against you, which means the court has instructed you to pay the outstanding amounts you owe the creditor. And this remains on your credit record until you settle them. So you never want to get to that point, all right? In the case of a property or a vehicle, the bank can repossess your assets and in addition, make you pay all the legal costs that they've incurred to repossess or to take back their assets pretty much. So it's always important to manage your debt and ensure you never get to such events. In times of real need, when you don't have savings and you have no ability to pay, it's best to speak to your financial institution and explain your situation before you fall behind. They're much more likely to try and assist you instead of missing payments and then expecting you to understand once you're already too far behind to catch up. So guys, I hope everyone learns a lot about credit agreements and debt management. Like I said, I encourage everyone to please post questions, anything that they find really interesting, whether it's a term, if you want to know more about interest, about arrears, about any of the main issues that I discussed, I would please urge you to just put that on our chat right now. It's extremely important for us to monitor exactly what you've got out of this session and this talk. And then, of course, there will be questions that will be sent to you. We're expecting answers on that, and then there will be cash prizes that will be given out. So if you guys listened and you were well informed of what I had to say, you will have no issues answering all those questions. So I'm going to be handing you guys back over to Kanani now. Thank you so much again for listening. Keep the comments coming in, and I sure hope you learned a lot with me. Please keep those brains fully charged for Mr. Motiba, my esteemed champion colleague. He's got some exciting stuff to bring to the table now.
Thank you so much, Mr. Hellman. It was quite explosive. Just by a show of hands, who's got questions? Who would like to ask a few questions? You are able to raise a hand. You can just look at the chat facilities there, where you press participants and then you can raise a hand, or you go to more and be able to raise a hand, or you can just post your questions on the chat. Is anyone having a question that would like to ask? I see, excuse me, there is Oluhle Mtetwa asking, how much is considered a good credit score? I don't know, Mr. Hellman, would you like to answer that?
So generally there's a number of so a credit score is based from 0 to 999 on your traditional generic credit reports, okay? So a really high credit score is anything above 750, okay? That puts you in the best tranche of being a highly rated credit score and someone that a bank will definitely consider. Something as well that I want to touch on, thank you by the way for the question as well, is when creditors assess your credit, okay, your credit score, they don't only look simply at just what your credit score number is, they also look at what your affordability is. So they go and see, all right, well, you want to purchase a property, let's say of R1 million, okay? You need to be earning a certain amount of income in order for them to extend you the credit facility, okay? And generally it works on 1/3 of the installments of your gross income for a property. So if you're looking for instance, R1 million property, the installment normally would be around anywhere between 8,000 to 10,000 Rand. Your gross income would therefore need to be anywhere from 25,000 and up. So that's also a very important condition that they look at when they are assessing your credit application and the ability to grant you that application, basically, your facility.
Thank you for that expanded answer. Let me just check through our chat here. We have another question that was asked by Politamba Mvula, asking, would you be granted credit if you have no history of any debt or anything with regards to being granted debt or credit? You're granted credit if you have no history. Mr. Hellman?
Good question. Thank you so much for asking. It's basically similar to, how can I look for a job when I don't have, and people are asking me for my employment history when I don't have? How do I then possibly get a job? Okay. Well, with credit, it's a little bit similar. However, it's encouraged. Now, one would never say take out a store account, okay, because that's pretty much a bad debt. Buying clothes, they depreciate in value the second you buy, the second you wear them, okay. But in order to build up some kind of a history, you have to start somewhere. So take out a small facility. Generally, sometimes you may get offered a 10,000 Rand store account credit, which can entice you, to go and purchase clothes for 10,000 Rand. Don't do that. Take out the smallest facility possible and make sure you can repay back whatever the installment is over a period of 6 months or minimum. Okay, and basically once you've done that, you've already created a credit history. Therefore, when you're looking for your bigger assets, your houses, cars, things like that, you have that credit history to show a creditor to say, listen, I have had a credit card or whatever, and now I'm looking to purchase something. Can you assist me? So take out something small to start with. They will be able to assist you as long as you obviously have an income to show them.
Well, thank you again, Mr. Hellman. There's another question here. Just two questions, really. The one says, what if you're not planning to have anything close to debt or credit? I'm not sure I understand the question. What if you're not planning to have anything close to debt or credit? Maybe we can give a student another chance to clarify on that question. But can I move on to the next one? It says, what happens if you do not pay back your debt? What happens if you do not pay back your debt?
Okay, so I did mention that in the discussion, but I'm happy to go over that again. So there are basically consequences of not paying back your debt, all right? So there's legal action that can be instituted against you to reclaim that debt back. And there's a number of different consequences that take place in different series depending on how far behind you are and depending on the nature of the asset, okay? So if it's a car or if it's a house, the bank will go and repossess that asset that you've been taken out, okay? They will go and they will take it back from you, okay? And not in addition to that, they will also basically, all the legal costs that because there's a lot of legal costs that the institution will incur. They will not do it themselves. They'll get a third party to do the repossession. They'll get the court involved. There's a whole lot of fees. They will also claim back those fees. So it's not like you just give the house back or the car back and happy days, you wipe your hands, you walk away. You will then have to pay back those legal fees that they've incurred, okay? In the event of when it's an unsecured amount, so an unsecured loan, I'm talking about you go and you look and you get a loan from the bank for 50,000 Rand, let's say. That's called an unsecured loan, okay? So you've taken the money, you've spent it. So how do they now get that money back? They can now go and issue summons against your assets. So they can go and they can say, well, Nathan, you've got a laptop, you've got a cell phone, you've got furniture. We're going to go and we're going to get a sheriff to claim all those assets. We're going to auction them, and that's how we're going to claim back that 50,000 Rand and also the legal fees that they've instituted. So it is very serious. Okay, those are the last resorts of action that a creditor takes. But they do give you opportunities to make payment arrangements because people do go into arrears. Like I said, it's important to always be in communication with your creditor. If you are in hard times, make a payment arrangement. They are looking to understand. They don't want to resort to those actions that I spoke of previously. That's the last resort they look at. So they do always give you an opportunity to catch up, to pay back your arrears. People get retrenched. People have serious bad situations that go wrong. They understand. But that's why I've always said communication is key. Even say, for instance, people sometimes get retrenched and they just think, oh, well, I'm going to try and look for a job now and try and manage my debt. That's not the way to do it. The way to do it is inform your creditor straight away. I've been retrenched. I'm looking for another job. but I may need to restructure my payments for the next 3 to 6 months. I mean, we'll all understand when we look at COVID-19, even if you don't have any debt, you would be aware in the media how there's these payment holidays that have gone around. Creditors have been trying to assist consumers not to fall behind in an arrears scenario because they understand that people are coming under hard times. So that's, like I said, communication is key. You don't want to not communicate and go hard and then wait for the legal letters to come your way.
Thank you so much. There's a hand. There's Sabelo who wants to ask a question. I think we can just allow Sabelo to ask a question. Let me just unmute her mic or his mic. My apologies. I think Sabelo, you can go ahead and ask your question.
Hi, I'm Ashri. I have a question.
Sorry, my
here.
apologies.
It's okay. So the thing is this: what if you have an agreement? Let's say, for example, a cell phone company like Vodacom, and it's a contract, but at the end of the month, maybe for 2 consecutive months, they don't actually take money from your bank, but then at the end of the second month, they give you a call claiming that you are, you're in areas. How do you deal with a situation like that, where it's the other party that didn't collect the money from you, not that you haven't paid and you are in areas?
Good question. Thank you for the question, by the way, Sabelo. So pretty much that's why debt management is so key. So it's always about being on top of your debts and understanding, all right, at this specific time of the month, I've nominated a debit order, let's say the 25th, X amount of money should go off. All right, why has my cell phone not gone off? The next day, you need to then contact the cell phone company and say, listen, you guys didn't take a debit. Whatever, they could have had an issue on their side, but they need to take the debit straight away. So you give them that instruction to take the debit. They're not going to say, oh, well, because our system's messed up, it's not our fault. You still owe us that money. So you always have the obligation to make sure that your accounts are up to date. It seldomly does happen, but I have come into occasions when that does happen. So just be on top of your debit orders and always alert the credit provider and say, listen, you guys haven't taken a debit. What's going on? Please take the debit straight away before I spend the money. And then they have to do that. If you go into arrears, let's say, so you're away on holiday, you don't have the time to phone them, all right? And you go into 2 months arrears. They're not going to penalize you, all right, straight away. They will understand that situation, but you still need to provide for that debit order that has not been taken.
Excuse me. Thank you so much, Mr. Nathan. I don't know if we can still take one question, or should we move on?
I think if we can, let's move on. Let's give the floor over to Nikki Motiba, and let's get him going. And then if there's any other questions, please post them on the group, and we will look at dealing with them at the end.
Okay. Thank you so much once more, Mr. Nathan Hellman. Thank you for your insightful presentation. Ladies and gentlemen, allow me to introduce our next guest speaker, our esteemed subject specialist, our profound one, the special one, Mr. Nikki Motiba. Just 2 seconds. I'm just checking how available is Mr. Nikki Motiba. I think he's online. And there we go. Mr. Nikki Motiba, welcome to the Know Your Case Zoom class brought to you by SAIA.
Thank you ever so much. I was wearing a listening cap. Now I'm wearing a speaker cap. Welcome everybody, and I'm happy that you managed to wake up so early in the morning to join us. You guys are not under any obligation to join us, but thank you ever so much. It means a lot to us. Thank you, Kanani. Thank you, Nathan. Can I go ahead?
By all means, shoot, boss.
All right. So today we're talking about 2 things. I'm just going to be introducing you to 2 things. Talk about engaging with our sector and a little bit of insurance. We'll talk about short-term insurance. We'll go straight into long-term insurance. And now that Nathan has spoken to you about the credit side and the agreement side, those legal terms, so you will see how it all intertwines. In the previous sessions, we've done budgetings and savings. So don't stress if you've missed those sessions. We will have the recordings, and in time, again, you can ask questions, but let them be questions on the context of what we are talking about today. So I think there's a picture somewhere on one of the mics. I'll talk to you about engaging the financial sector. As much as you know, how many of you have a bank account? By show of hand, let me see. You'll click on more, go to chat, and then you'll see that end that says, oh, I see. I can see one of the students saying, yes, I do have an account with the bank. The reason for you to go to the bank is you want to start saving, isn't it? Usually it's, my mother would send me money or my father would send me money to the bank account. It's convenient for me to go to the bank and save. But at the same time, most of the time it's difficult to save because you withdraw a lot. So the banking system is not only for saving and taking out money, meaning the ATM transactional thing. You would have your bank assisting you with what Nathan was talking about, the credit side of life, in terms of extending a loan to you, investments, and so forth. So that's one sector of the industry within the financial sector that will help you with those transactional things. But you'll see now that as time goes, most of the institutions are starting to become interlinked. When we talk about, say, for argument's sake, where you go to a micro lender who might not necessarily be a bank, when you borrow money from Mashonisa, so Mashonisa will take your money directly from your bank account. So it is two financial institutions. Now, it's the bank extending its services to another third party. So I'm sure you understand that portion of the system. And you do have the Bitcoin people who would assist, who are not necessarily the banks, but they are considered on the financial side of things as well. That part I'm sure you understand. Shall we talk about short-term insurance? How many of you, again, by show of hands, understand short-term insurance? I can see you. Then there's long-term insurance as well. I'm going to take off my jacket. It's getting warm in here. I think this winter is starting to get into me. It's not Nathan, it's not even, I don't need a temperature gauge to see if I'm on the COVID side. Short-term insurance. This is the insurance where things like your car, your household, your personal liability. When I talk about personal liability, when people sue you, you've done something wrong and people sue you. For argument's sake, if somebody is building at my house and they promise me something, and it doesn't come out the same way that they promised, there could be a constructor's a construction insurance. But I might sue the directors of that company personally. That's personal liability insurance. The building insurance, you do know. And I've noticed again, most of us will travel from, say, we travel out of the country, overseas. Do you know that you can take something called travel insurance? Yeah. So what they do is they pay for your luggage if it's lost. They pay for your ticket if there was a train delay or a plane delay. They pay for, it's a whole lot of things that they can pay for. It's called travel insurance. So, consider that as well. There's something called pet insurance as well that most people don't know about. If you have a four-legged friend, I have a Jack Russell. His name is Buddha. It's a beautiful dog. It's white. It's got a patch here. It's brown, and it's got a line here. He always, you know those smaller dogs, and he always jumps, and sometimes his hind leg is out. You get what I mean? So that's how much I love my dog. I can talk about my dog that way. I can have insurance for that dog, whether it's a cat or not. So it's a sort of a medical aid for your dog. That's travel insurance. That's pet insurance. Now, we'll talk about many other types of insurances, but there is a crux of what we call the short-term insurance because it's not for life. And then, yes, of course, you do get the longer-term insurance. On the longer-term insurance, that's when now they talk about your life. I'm sure you've seen there's what we call assisted business, especially within our community, the community. We have funeral covers. You go to a funeral cover, take out a policy, and when you pass away, they will pay a certain amount for a dignified burial. And you've seen adverts on TV as well, where it comes every 3 seconds. They're talking about, should you die? There's no should you die. Let me remind you, it's called when you die. 2 things in life are guaranteed. You remember, your birth and your taxes. The other one is death. It's not guaranteed in life. It is life itself. So there's long-term insurance called the life side, and then there's the disability side, there's the dread and disease. So when you speak to your financial advisor, remember here we're not giving you financial advice. We are merely coaching you. We're telling you about the features of the product. When you speak to your financial advisor, they will tell you which package is suitable for you. Remember when Nathan spoke about managing your debt, he spoke about the credit. When Nathan spoke about you're managing your credit, I like that, Nathan. Just that shift of the board. Okay, I can also show you mine. Okay, I'm also gonna. Can you see Know Your Cash? So when we talk about that's South African Insurance Association. Now the South African Insurance Association, guys, as I was talking to you about long-term insurance, they are a body that makes sure that every insurance company adheres to certain government policies, good practices. So you'd find that if there are any complaints about the insurance company, it doesn't go directly to the South African Insurance Association. It will go to the ombuds. But the South African Insurance Association is an umbrella body that looks after insurance companies. We'll talk about different bodies. So within the financial sector, basically, there are many other careers as well that you can look at. So can you see now, you're starting to see how everything else fits in. You could be from the credit side of things, as Nathan spoke about. You could be on the agreement side of things, which is the legal side. We do have an advocate on our panel as well. You could decide to be on the insurance side. You know, if you're a specialist or you prefer to be on the short-term insurance side, you could be within the accounting stream, you could be within the legal stream. And then there is, of course, the long-term insurance, which is life. I'll talk to you slightly about that as well. I'm just looking at my notes there so that I don't complicate things for you. So, banking sector. Where do you get your student loans? From the bank, isn't it? Where do you get your credit cards? From the banks, and the savings and the day-to-day facilities. Insurance. Remember now, when we talk insurance now, we're talking about a contract between yourself and the insurance company saying, in the event of something happening, the insurance company will restore you back to where you were. Let me give you a typical example. You have a car, a short-term insurance. If you are involved in a car accident, the insurance company pays the panel beaters to fix your car. If your car is lost, now remember, you would have taken credit to buy your brand new car, your second-hand car, as Nathan was saying, you'll be paying your premiums every month. Guess what? Then they steal your car. You still owe the bank the amount of money that you took from the bank. They don't care that the car was stolen. So this is the beauty of insurance. This is where it comes in. Car stolen, bank wants money, insurance walks in and says, we got you covered. How much do we owe the bank? We owe them probably 35,000 rands. Okay, insurance, come in. You'll be sitting like you're sitting now at home, just one phone call away, one claim form away, you know. So insurance helps in that regard. The other one, it's almost like when we talk about, say, the life insurance. So remember, I'm actually not going step by step with short-term insurance, what the bank is, long-term. I want you to see how they all fit in. If your parents buy a house, they will go to the bank and the bank will extend that loan to them, which is called a bond. The bank will insist that they should have you guessed it correctly, credit insurance. That means should the bank at any stage experience a loss, the insurance will come in and pay for it. Take a long-term insurance, for argument's sake, a life cover. Your dad might have a life cover. If they should be unemployed or fall ill, God forbid, guess what's going to happen? They will not be able to afford to pay the monthly installment. Or, God forbid, the Lord above says, you know what, I want my people back, and your parent passes away. Or you as the owner, you pass away. That's when the insurance comes in, because you still owe the bank. Nathan made an example of R1 million. Say you've taken a bond of R1 million. You've paid it for 4 months. Do you realize that if with your installments or the installments that you'll be paying to the bank, you might be paying, let's say for argument's sake, 10,000 rands a month. You would have paid 30,000 rands in 3 months. You're left with 970. So the other portion that's remaining, that's where your life cover comes in. So they will pay the bank. Can you see the beauty of insurance? So most people would say insurance is a grudge buy. You know what? I'm not gonna need insurance. How many of you have cell phones? There's a lady who asked a question and said about premiums. They didn't take their premiums or their installments on the second month, and it was not her fault. There is an insurance like that, where if there is a debt that you incur, the insurance will kick in. Sometimes they pay a certain portion. So those are specialized insurances, or rather we call them value-added products. So it is the standard insurance, but they have those nice things. You know, when you have a car, you have nice range, nice music system. Those are value-added products. So yeah, if there are any questions that you would like to ask me, go ahead. I am rolling as I'm going. I'll talk to you about as well the insurance ombudsman. All right. So you are the policy holder within insurance. All right. Because you went to the bank. You went to, yes, sometimes even the bank. I'll tell you, insurance is no more as traditional as it used to be. Remember, I spoke about these financial institutions being intertwined. The banks are selling insurance now. You know, when you go and take a cell phone, the cell phone company is selling insurance on behalf of the insurance company. So it will be underwritten by an insurance company in the background, but in the forefront, it's being sold by your service provider. You name them at the shop when you go to the mall, and they say, ma'am, won't you take insurance about 50 rands a month, so that when you lose your phone, or rather they have the terms and conditions, we will pay for your phone when this and this happens. We will exclude X, Y, and Z. Did you hear me saying exclude? Usually there's an exclusion clause in any insurance. They will cover certain portions, but they will never cover certain aspects. They might say if there's uprising, you know, a bomb from when there's war falls on your house, they will not pay for that. Excuse me. Because it might be specialized risk insurance. Do you get it? So there are different types of insurances basically. Now, the ombudsman, when you have a complaint with insurances, this is where you go to now. This is the BOFA now, the Boomba, the guy who says, insurance company A, you've done wrong to Mr. So-and-so or to Miss So-and-so, fix it. They will make sure that the insurance company fixes it for you. Well, you know why? Because they are almost like the judge of the court. They have the power to tell the insurance what to do. If you are in the wrong, they'll tell you you are in the wrong. Nikki Muchiba, out. If the insurance company is in the wrong, they will tell the insurance company you are in the wrong. But they usually want to form an amicable solution between you as a policy holder and then obviously the insurance company itself. Are there any questions, Mr. Kane? I can see there are a whole lot of questions that were asked.
Yes, there's a question here from Choli Temba. Thank you again for your participation. It says, can you insure property that you have in an informal settlement and you are listing it out, but you have not yet registered it as part of your income? Should I read the question again, sir?
Yes, want to read it for the benefit of our guests?
Choli Temba is asking, can you insure property that you have in an informal settlement and you are listing it out, but you have not yet registered it as a part of your income?
Okay, the question has three things to it. First, it's the informal settlement side. We'll talk about financial inclusion there. And is it an insurable property, meaning is it an insurable interest? And if you're saying you haven't registered it, I'm getting the feeling that it's on the tax side of things, because you say you haven't registered it as part of the income. But already when you're renting it, it's already part of your income. Remember what we spoke about earlier on. Don't even evade your tax. So that's another topic. Yes, you can insure your property in an informal settlement. There are specialized companies that deal with it. In the previous years, most of the areas were financially excluded. So the government and everybody else are trying to make sure that there's something called financial inclusion. So there are specialized companies. Remember, we spoke about value-added products. You might have it as an extension of one of the properties that you have. To answer it shortly, yes, Tolly, you can insure your property even in informal settlement. It's a high-risk area. Remember those things that Nathan spoke about, things that they check when they give you a credit score. When you do an insurance, there are certain risks that we check. For argument's sake, in a squatter camp, the close proximity of each and every property. Squatter camps are different. You'll find those that are too close to each other, and then you have people like, I remember that when they built Orange Farm, they gave people yards, so people had enough space, and their own special demarcated space, and the zozos, them cuckoos, were not too close to each other. I hope that answers your question. Somebody asking about premiums there, Mr. K?
Yes. So, Oluhle Mthetho says, if you fail to pay someone, if you fail to pay some, not all, of your premiums, will the insurance company still insure you in that event? Something should happen.
All right. One thing that I always encourage people to remember, we're saying we're not giving you financial advice, we're just coaching you on what we know. You can speak to your financial advisor about that, or the financial institution itself. Always read your terms and conditions. Always read any paper that they give. Remember, they sometimes send mail in the post, and they might have changed the clause without you knowing. Legislation changes, and it forces insurance companies usually to act differently. They might say, we will not pay you if you do not pay your full premium. But legislation might force them to pay a portion. So they might apportion. If you pay half premium, do you think it's fair for the insurance company to pay you fully? So it depends entirely on you and your insurance company. So sometimes they will pay, like Nathan was saying, go and speak to the financial institution and say, I am no longer working, my income, I don't have as much income. Then they will try to restructure your payments or your repayments or your installment or even your premiums. They might say, you were covered for R1 million, we will reduce it to 500,000 rand. That might reduce your premium, especially in these trying times. One thing I would like you to do is, when you speak to your parents as well, or your elders, or anybody else that you know, please encourage them to have a word with the insurance companies, with the banks, with the financial institutions. You see, as Financial Care Corporation, that's exactly what we're trying to do. Encourage you guys not to be scared and see these financial institutions as monsters. Because I know typically from home, how do you start talking finance with your dad? You know what I mean? There was this guy who once said, I think the dad was making noise saying, you're not passing as much as you pass. You're supposed to be getting better grades at school. I think the guy was just coming up with E's and F's and D's. And excuse me. The student complained to his dad, or the child said, Dad, I don't compare you to Patrice Motsepe. They are your age as well. I don't know why now you compare it now with other students. Ne? So even yourselves, we don't have that conversation usually with our parents. But start having those conversations. Start reading newspapers, man. Be flow when you talk about finance. It's not a monster. It's not a monster, guys. I see Ntanta is smiling there. Ntanta, did I say something right out there? Any other question, Mr. K? I'm clicking on more. You can do that as well. If you click on more, you'll see there's a portion that says chat, and then that's where you can raise your hand and ask questions. you were saying something about, please repeat what the South African Insurance Association is. Okay, in a nutshell, they are an organization that has been chosen by, well, most as insurance companies affiliate to an association. Think of soccer. You have the South African Football Association. You have different clubs, affiliating to that association. So you have a whole lot of insurance companies. Some of them are fly-by-nights. Then you have the Financial Sector Conduct Authority, FSCA. So that's another body as well that handles the legalities, if you may call it, around insurance. I'm trying to make it as simple as possible. So yeah, it is a body within the insurance space. Mr. Kane, any other questions that you can see from your side? Okay, value-added. Somebody's asking about the value-added products and the independent. Okay, there you go. I'm gonna just read this one. We have an answer for one of our students. Student who asked about the cell phone contract. Please note that there is an organization called the Independent Communications Authority of South Africa, which deals with all matters around telecommunications. This therefore means if you have a dispute around cell phone contract billing disputes, and also you can go to them. They are called ICASA, I think. This therefore means if the service provider fails and ends up suspending your service due to what you indicated earlier on, the error of not deducting money, you can refer the dispute to ICASA. Are you starting to get a trend of what's happening here, guys? First, we spoke about the credit side of life. Done. We spoke about the financial sector, banking, short-term, long-term insurance. Here's another element, which is now ICASA. Now, these are the people, which is an organization that takes care of, the service provider on the telecommunication side. So this is exactly what FCC is trying to make. Be aware that each and every organization feeds, it's neat Legos, jigsaw puzzle. Do you get the picture of finance? I'm quite happy. I think we've done our part for today. If there are any more questions, we'll
my apologies for that. I had a network glitch. But
all right.
I managed to sort it out. Sorry about that, everyone.
No, everybody's sorted.
There are some questions. Can I just maybe allow me to because my chats have gone since I was logged out and back on. But allow me to ask. I'll quickly ask Advocate to read some of the questions that we have missed, also from Mr. Hellman's presentation, and some of the responses that were given in text, just to also acknowledge the people that have participated, and some of the other questions that could have come through after I had been kicked out.
Let's put your troubles at ease, Mr. Kane. Some of the questions we did read, but yes, let's allow Advocate to answer to some of those questions. I realized that there are a whole lot of other questions that were asked about Olwetu, about NL, Owetu, and there's somebody called iPhone. So yeah, go ahead.
Advocate, please unmute. I'm trying to unmute from my side. Please, can you unmute? There we go.
All right.
Thank you. Hi everyone, my name is Lwazi, Advocate Mieza. Just a few responses. I think there was an interesting question around if you are in debt, can that implicate you to SARS? With regards to that part, SARS is only responsible to deal with your earnings. So they tax you on the basis of how much are you earning. Hence, their process is called pay as you earn. So if you have debts, SARS has nothing to do with having to tax you more because you are owing or you are kind of struggling to manage your debts. So SARS doesn't get to manage that part. They only focus on the tax based on how much you are earning. That was the question which I think Kanani did not cover. Regarding the ICASA issue, I felt that question was more realistic. It sounded like the person who asked that question was even affected by the situation. Hence, I had to go as far as providing the details of the organization that can specifically deal with this issue. Because if the error was from the side of the service provider, there is really nothing much that as a consumer you can do. The worst part is that your credit will be affected by that, and only to find that you were not the real cause of such. Hence, then it is advisable that you escalate your matter to this organization, because it was definitely not through you that debit was missed. Those were just two questions and responses which I felt Kanani skipped from my side. That's it.
Okay.
Okay, thank you so much, Advocate. Not much ado. I don't know, had you wrapped up in terms of further instructions as to what we're going to do from here on, the time in which I had a glitch? Did you get to that part, or are we wrapping up now?
Please, can you proceed with that, Kani? We did not touch on it.
Okay. Thank you again, everybody, for participating. It was well worth it. We really, really appreciate you guys taking your time to come and spend with us, and we get imparted with knowledge. As we grow, you grow. We are because you are. What's going to happen next is that in the WhatsApp group that we have, there are a couple of questions and possible answers, which is a multi-choice question. Please go through those questions, email them through to nhlanhla@fccorp.co.za, and first come, first serve. We've got a competition running, remember? Hey, it's 2,000 rands, that's up for grab, that's the incentive. 4 winners are going to be announced, I think around, what's the time? What time will you be announcing the winners, Advocate? Around 1?
Yeah.
Yes, I think around 1 we'll be announcing the 4 winners, which will be a cash prize of 500 rands each. Will be sending cash sending them the incentives. So all the best. First come, first serve. I think it's 6 questions. 3 questions on credit and debt management. 3 questions on knowing your insurance. All the best. I hope you guys nail it. I hope you are the winner. Thank you guys once again. Thank you, Mr. Hellman, for the chat. Thank you, Mr. Nikki, for your contribution. Thank you for a wonderful presentation. Advocate, thank you for the work you've been doing in the background. Sabelo, Tolitemba, Ganda, some are called students, Sihle, Zianda. We've been seeing you. You guys have been participating. Know your cash indeed, Mr. Mutiba. Know your cash indeed. I hope everyone is comfortable, but from my side, I appreciate it. Thank you.
Thank you. Thank you ever so much. Cheers, guys.
Hope everyone.
to see you next time.
Cheers,